Listen, I'm going to tell you something that's going to make you angry. The jobs report came out today and it's complete garbage. I don't care if the headline numbers look okay. I don't care if the unemployment rate went down. And I definitely don't care about the spin that the media and the government are putting on this data. What I care about is the truth. And the truth is that the American labor market is frozen, the numbers are being manipulated, and if you're making career or investment decisions based on this report, you're being lied to. I'm Charles Wellington, and I've been analyzing labor markets and economic data for over 40 years. I've seen recessions, booms, crashes, and recoveries. I've made millions by understanding what the data really means, not what the government wants you to think it means. And right now, what I'm seeing in this jobs report is a carefully constructed narrative designed to keep you calm while the economy slowly deteriorates around you. Before I tear apart this jobs report line by line, I need you to do something for me right now. Hit that subscribe button. Smash it, because what I'm about to show you is analysis that you will not get anywhere else. The mainstream media is not going to tell you this. Your financial advisor probably doesn't even understand this. But this channel exists to give you the real story, the uncomfortable truth that nobody else has the guts to share. So subscribe right now. And while you're at it, hit that like button and drop a comment below telling me if you're currently employed, looking for work, or worried about your job security. I want to know where you stand because this affects every single one of us. Here's what the government reported today. In December, the U.S. labor market added 50,000 jobs. 50,000. That's it. Analysts were expecting 73,000. So we missed expectations right out of the gate. The unemployment rate fell from 4.6% to 4.4%. On the surface, that sounds pretty good, right? Jobs added, unemployment down, everything's fine, nothing to worry about. Go back to sleep, America. Wrong. Completely and utterly wrong. Because when you dig into the actual data, when you look beyond the headline numbers, when you understand how these statistics are calculated and manipulated, you see a very different picture. You see a labor market that is not healthy. You see an economy that is not creating quality jobs. You see millions of Americans who are struggling to find work or who have given up entirely. Let me show you what's really happening here. And I'm going to prove to you with facts and data that this jobs report is nothing more than carefully orchestrated propaganda designed to keep you from panicking. First, let's talk about the overall trend. I want you to look at a chart that shows monthly jobs added or lost over the past few years. What do you see? A clear, undeniable downward trend. The labor market has been weakening month after month after month. We're not talking about a temporary blip. We're not talking about seasonal variation. We're talking about a structural deterioration in job creation. Look at where we are today, 50,000 jobs. That's pathetic. That's barely enough to keep up with population growth. That's not economic expansion. That's economic stagnation. And this is exactly why the Federal Reserve has been cutting interest rates. They're trying to stimulate the economy. They're trying to support the labor market, but it's not working. The trend is down and it continues to go down. Now, here's where it gets really interesting. Here's where the manipulation becomes obvious. The government previously reported that we lost 105,000 jobs in October. That was the official number, 105,000 job losses. That's bad enough on its own. But guess what happened? They just revised that number downward, way downward. The new revised figure for October, 173,000 job losses. 173,000. They were off by 68,000 jobs. 68,000. That's a 65% error. How do you make a 65% error when you're counting jobs? How is that even possible? Let me tell you how. It's not an error, it's deliberate. They report an optimistic number initially to keep people calm, to keep the markets happy, to keep the narrative going that everything is fine. And then later, when nobody is paying attention anymore, they quietly revise the numbers down to reflect reality. By that time, the damage is done. The false narrative has already spread, the headlines have already been written, and nobody goes back to correct the record. And it's not just October. They also revised November's numbers down by 8,000 jobs, 8,000 additional job losses that they conveniently forgot to mention the first time around. So now they're telling us that December added 50,000 jobs. Should we believe them? Should we take that number at face value? Or should we expect that in 2 or 3 months they're going to come back and say, oops, we made another mistake? It was actually negative 30,000 jobs. This is how the game is played. This is how they manipulate public perception. And if you don't understand this, if you're taking these numbers seriously, you're being played for a fool. Now let's talk about the unemployment rate. The government is celebrating because unemployment fell from 4.6% to 4.4%. That's a 2/10 of a percentage point improvement. The media is spinning this as great news. Look, unemployment is going down. The labor market is improving. Everything is wonderful. But here's what they're not telling you. The unemployment rate is one of the most manipulated statistics in all of economic reporting. It doesn't measure what you think it measures. It doesn't count millions of people who should be counted as unemployed. If you've been looking for a job for 6 months and you've given up because you can't find anything, you're not counted as unemployed anymore. You've left the labor force. You're invisible in the statistics. If you're working part time because you can't find full time work, you're counted as employed. Even if you're desperate for more hours, even if you're struggling to pay your bills, you're employed in the government's eyes. The real unemployment rate, when you include discouraged workers and people working part time who want full time work, is much higher than 4.4%. It's probably double that, but they don't want you to know that. They don't want you to understand how many Americans are actually struggling in this economy. So when they tell you unemployment went down, what they're really telling you is that fewer people are actively looking for work. Maybe because they found jobs, or maybe because they've given up hope. The statistic doesn't distinguish between the two. But the narrative they want you to believe is that everything is getting better. I'm here to tell you that it's not getting better, it's getting worse. And the fact that they have to manipulate the numbers to make it look better proves my point. Now let's talk about wages, because this is where it gets really insulting. The government is reporting that wages are growing at a rate of 3.8%. That shot up from 3.5% the prior month. And the media is celebrating this too. Look, wages are going up, workers are getting raises, the economy is strong. But here's the question nobody is asking. 3.8% wage growth compared to what? What's the inflation rate? Because if wages are going up by 3.8%, but inflation is running at 6%, you're not getting ahead. You're falling behind. You're losing purchasing power every single month. And that's exactly what's happening. The real inflation rate, not the manipulated CPI number they publish, but the actual cost of living that you experience when you buy groceries, pay rent, fill up your gas tank, pay your insurance premiums, that real inflation rate is somewhere around 6%, maybe higher. So if your wages go up 3.8% and your costs go up 6%, you're losing 2.2% of your purchasing power every single year. You're working just as hard, maybe harder, and you're getting poorer. Your standard of living is declining. The middle class is shrinking, the poor are getting poorer, and the government is telling you to be grateful because wages are growing. This is an insult. This is a lie. And if you don't see through it, you're going to continue struggling while they tell you everything is fine. Let me put this in terms that everyone can understand. If you made $50,000 last year and you get a 3.8% raise, you're now making $51,900 this year. Congratulations. But if inflation is running at 6%, the goods and services that cost you $50,000 last year now cost you $53,000. You're short by $1,100. Your raise didn't help you. It just slowed down how fast you're falling behind. This is the reality for millions of American workers. They're running on a treadmill that keeps speeding up. They're working harder for less. And the government is celebrating wage growth as if it's some kind of victory. It's not a victory. It's a defeat disguised with positive language. Now let's talk about what this jobs report means for the Federal Reserve and interest rates, because this is where it affects your investments, your savings, your mortgage, your entire financial life. The next Federal Reserve meeting is January 28th. At that meeting, they're going to decide whether to cut interest rates or not. Before today's jobs report, there was a 13.8% chance that they would cut rates at that meeting and an 86.2% chance that they would hold rates steady. After today's report, the odds of a rate cut fell from 13.8% to 5%. Why? Because the jobs report wasn't terrible. It wasn't good, but it wasn't terrible. And if the report had been horrible, if we had lost 100,000 jobs, the Federal Reserve would feel pressure to cut rates immediately to support the labor market. But since the report was just mediocre instead of disastrous, they don't see the urgency. They're going to wait. They're going to hold rates where they are. They're going to continue monitoring the data. Now look at the next meeting after that, March 18th. Before today's report, there was a 59.1% chance that rates would be unchanged by then. After today's report, that probability went up to 68.9%. Same logic. If the labor market isn't collapsing, there's less need to cut rates. But here's what you need to understand. The Federal Reserve is currently at a Fed funds rate of 3.5 to 3.75%. That's the target range. They've already cut rates multiple times over the past year. They've been trying to support the economy, but it's not working. The labor market continues to weaken despite rate cuts. And here's the bigger problem. The Federal Reserve's ability to cut rates further is limited. They can't go back to zero. They can't go negative like some European central banks did. They need to maintain some dry powder for when the real crisis hits. And trust me, the real crisis is coming. Now, let me show you data that the mainstream media barely mentioned. This is called the Challenger Report, and it tracks job cuts announced by employers. For the full year of 2025, employers announced approximately 1.2 million job cuts. 1.2 million. That's a 58% increase compared to 2024. Let me repeat that. Job cuts increased by 58% year over year. Does that sound like a healthy labor market to you? Does that sound like economic expansion, or does that sound like companies preparing for harder times ahead? Let me break down where these job cuts are coming from, because this tells you everything you need to know about the economy. Warehousing saw 95,317 job cuts in 2025. Why? Changing supply chains, shifting consumer behavior, and automation. Translation: consumers are spending less, companies are cutting costs, and robots are replacing humans. Technology saw 154,445 job cuts. Why? Artificial intelligence and overhiring in previous years. Translation: the tech boom is over, AI is eliminating jobs faster than it's creating them, and companies that went on hiring sprees during the pandemic are now laying people off. Government saw 308,167 job cuts. That's up 703% compared to 2024, 703%. The number of federal workers decreased by 9% compared to the previous year. Translation: the government is broke, they're cutting costs wherever they can, and more government layoffs are coming. This is the reality of the labor market. While the official jobs report is telling you that 50,000 jobs were added, over 1 million jobs were cut or planned to be cut over the past year. The disconnect between the official narrative and reality is staggering. Now, there was one piece of good news in the Challenger report. In December, employers announced plans to hire approximately 10,500 people. That's up 16% compared to November and up 31% compared to December of 2024. So hiring plans are increasing slightly. But let me put that in perspective. 10,500 planned hires versus 1.2 million announced job cuts over the year. That's a drop in the bucket. That's not a recovery. That's not a turnaround. That's a tiny glimmer of hope in an otherwise dark picture. So, how did the stock market react to this jobs report? The market went up. Of course it did. The S&P 500 is up less than 1% today, and it actually hit a new record high. Why? Because the report wasn't terrible enough to scare investors. It was just bad enough to keep the Federal Reserve cutting rates, but not bad enough to trigger panic. But here's what you need to understand. The stock market is not the economy. The stock market is not the labor market. The stock market is a rigged game that's designed to go up regardless of underlying fundamentals. How is it rigged? Through liquidity. The Federal Reserve is currently printing $40 billion a month. $40 billion every single month. Where does that money go? It flows into financial assets. It flows into stocks, bonds, real estate. It inflates prices. It creates bubbles, and it makes rich people richer while working people struggle. So when you see the S&P 500 hitting new record highs, while the labor market is weakening, while job cuts are accelerating, while real wages are falling, understand what's happening. You're witnessing financial asset inflation. You're witnessing the wealth gap expanding. You're witnessing a system that benefits people who own assets at the expense of people who work for wages. This is why I've been telling you for years that you need to stay invested. I'm not saying the stock market is fair. I'm not saying it makes sense. I'm not saying it's sustainable forever. But as long as the Federal Reserve keeps printing money, as long as liquidity keeps flowing into the system, stocks are going to go up. Not because companies are performing better, not because the economy is stronger, but because there's too much money chasing too few assets. This is the game we're in. And if you're sitting in cash, if you're on the sidelines, if you're waiting for things to make sense, you're losing. You're watching your purchasing power erode while people who understand the game are getting wealthier. Now, let me show you what the Federal Reserve is projecting for the rest of 2026. Back in December, they gave their official forecast. They expect the unemployment rate to end this year at 4.4%, and we're currently at 4.4%. What does that tell you? It tells you that they don't expect things to get better. They don't expect job creation to accelerate. They don't expect unemployment to fall. They expect the current situation to persist for the entire year, frozen, stagnant, neither improving nor collapsing. This is their best case scenario, and their best case scenario is that nothing changes. We just muddle through with a weak labor market, tepid job growth, and millions of Americans struggling to find work or make ends meet. The Federal Reserve has stated that the most important data point for them is the unemployment rate. If unemployment rises, they'll be more inclined to cut interest rates. If unemployment falls, they'll delay rate cuts. They're essentially admitting that they're in reactive mode. They're not in control, they're just responding to data as it comes in. And here's what they're projecting for interest rates. They expect to cut rates only one time this year, 1/4 point cut. That would bring the Fed funds rate from the current 3.5 to 3.75% range down to 3.25 to 3.5%. One cut. That's it. That's all they think they can do. That's all they think they need to do. Even though the labor market is weakening, even though job cuts are accelerating, even though real wages are falling, they think one rate cut is sufficient. But here's where it gets interesting. This projection is based on Jerome Powell remaining as Federal Reserve Chair. But we all know that's about to change. President Trump is going to nominate a new Fed chair very soon, could be any day now. And that new Fed chair is going to be much more aggressive with rate cuts. That's the expectation. That's what markets are pricing in. Now, some people will say, but Charles, the Federal Reserve's decisions are made by 12 voting members, not just the chair. So a new chair won't make that much difference. And to those people, I say you don't understand how the Federal Reserve works. The chair has enormous influence over the other voting members. The chair sets the agenda. The chair frames the discussion. The chair guides the consensus. And historically, Federal Reserve decisions are almost always unanimous. The voting members fall in line with the chair's position. There are occasional dissents, especially in recent years, but they're rare. So when a new chair comes in with a mandate to cut rates more aggressively, you better believe that's what's going to happen. The voting members will find reasons to justify it. They'll emphasize different data points. They'll change their interpretation of the economic situation, and rates will come down faster than the current projection suggests. Now, let me tell you what's really going to happen over the next year. And I'm basing this on 40 years of experience analyzing labor markets and economic cycles. The job losses that we're seeing now, the 1.2 million announced cuts, that's just the beginning. That's companies preparing for what they see coming. When companies announce job cuts, they're not doing it randomly. They're not doing it because they want to be mean to their employees. They're doing it because they see their revenues declining. They see their profit margins shrinking. They see economic conditions deteriorating, and they're cutting costs to survive. Think about what this means. When a company announces layoffs, it's because their business is slowing down. And when businesses across multiple sectors are all announcing layoffs at the same time, it means the entire economy is slowing down. The warehousing sector is cutting jobs because consumer spending is falling. The tech sector is cutting jobs because the growth bubble has popped. The government is cutting jobs because tax revenues are declining and debt levels are unsustainable. These are not isolated incidents. These are symptoms of a broader economic slowdown. And what happens during economic slowdowns? More job losses, more unemployment, more people struggling to find work, and eventually a recession. Now, I'm not predicting that we're going to have a recession this year. The Federal Reserve and the government are doing everything they can to prevent it. They're cutting rates, they're printing money, they're manipulating statistics, they're controlling the narrative. But the underlying fundamentals are weak. The trends are negative. And at some point, you can't fight gravity anymore. So here's what I need you to understand: the labor market is not healthy. The jobs report is not accurate. The unemployment rate is manipulated. Wage growth is not keeping up with inflation. Job cuts are accelerating. And the Federal Reserve's ability to prevent a downturn is limited. What does this mean for you? It means you need to prepare. You need to protect yourself and your family from what's coming. Because whether it's a recession or just continued stagnation, millions of Americans are going to suffer, and you don't want to be one of them. First, if you have a job, make yourself indispensable. I don't care what industry you're in. I don't care what position you hold. Make sure your employer values you so much that you're the last person they would ever consider laying off. How do you do that? You produce results, you solve problems, you make your boss's life easier, you generate revenue or you cut costs, you become essential to the organization's success. Because when layoffs come, and they will come, management doesn't look at who's been there the longest or who they like the most. They look at who they can afford to lose. Don't be that person. Second, reduce your debt. Right now, today. Stop borrowing money for things you don't need. Pay down your credit cards, pay down your car loans, build a cushion. Because if you lose your job, if your hours get cut, if your income drops, the last thing you need is massive debt payments eating up what little money you have coming in. I don't care if interest rates are low. I don't care if everyone else is borrowing. Debt is risk, and in an uncertain labor market, you want to minimize risk, not maximize it. Third, build an emergency fund. You should have 6 months of living expenses saved in cash. I know that's hard. I know most Americans don't have that. But you need to try, because when the layoffs start, when unemployment rises, when jobs become scarce, you need a buffer. You need time to find new work without panicking. You need to be able to pay your bills while you look for the right opportunity instead of taking the first desperate offer that comes along. Fourth, diversify your income. Don't rely on a single employer for 100% of your income. Find ways to make money on the side. Freelancing, consulting, a small business, investments, anything that gives you multiple streams of income. Because if one stream dries up, you're not completely screwed. And fifth, stay invested. I know the economy looks scary. I know the labor market is weak. I know it feels like everything is going to fall apart. But as long as the Federal Reserve keeps printing money, as long as liquidity keeps flowing into the system, financial assets are going to continue inflating. Stocks, real estate, gold, these are going to go up over time regardless of what's happening in the real economy. This is the disconnect I've been talking about. The stock market is not the economy. Rich people keep getting richer through asset ownership while working people struggle. If you want to build wealth, you need to own assets. Period. End of story. Let me bring this all together for you. The jobs report that came out today is garbage. The numbers are manipulated. The unemployment rate is a lie. Wage growth is not keeping up with inflation. Job cuts are accelerating. The labor market is frozen, and the Federal Reserve is running out of tools to fix it. But here's what's not going to happen: the government is not suddenly going to start telling you the truth. The media is not going to start reporting the real story. Your financial advisor is probably not going to explain any of this to you. They're all invested in maintaining the narrative that everything is fine. So it's up to you. You need to see through the lies. You need to understand what's really happening. You need to protect yourself and your family, because nobody else is going to do it for you. The labor market is going to continue weakening. Job losses are going to continue accelerating. Real wages are going to continue falling. And at some point, probably later this year or early next year, we're going to have a reckoning. The question is, are you going to be prepared when it happens? Or are you going to be caught off guard because you believe the government's fairy tale? Now, I need you to take action. If this analysis has opened your eyes, if you understand now why the jobs report is complete nonsense, if you see the manipulation and the lies for what they are, I need you to hit that like button right now. I need you to subscribe to this channel if you haven't already, and I need you to drop a comment below. Tell me, are you worried about your job? Are you seeing layoffs at your company? Are you struggling to find work? I want to know what's really happening out there in the real economy, not the fake economy that the government is reporting. This channel exists to give you the truth, not the comfortable truth, Not the convenient truth, the real truth, even when it's ugly, even when it's scary, even when it challenges everything you've been told to believe. The labor market is rigged. The numbers are manipulated. The narrative is controlled. But if you understand what's really happening, if you prepare accordingly, if you protect yourself and your assets, you can survive and even thrive in this environment. The choice is yours. You can believe the government's lies and hope for the best, or you can face reality and take action to protect yourself. I know which option I'm choosing. I know which option smart people are choosing. The question is, which option are you going to choose? Thank you for watching. Thank you for being part of this community. Now go out there and protect yourself. The labor market is frozen. The economy is weakening. The government is lying. And you need to be ready for what comes next. Remember, knowledge is power, but only if you act on it. Don't just consume this information. Use it. Make changes in your life based on what you've learned here today. Your future self will thank you.